What's going on YouTube? Jake Unfiltered here. Okay, so all I want to do is say that in my opinion, nobody buys individual stocks unless you're doing it for like fun or you know what you're doing, or it's just a small percentage of your portfolio. I always think that I should buy index funds and always have a plan for what you're going to do and stick to the plan, okay? Now, for stocks, that's a completely different story. Stocks are a lot riskier than index funds because index funds or ETFs and index funds, you can just invest money into it forever until you retire. Like VT, VTI, SPY, or VU, all those fun little index funds and ETFs. So you can invest in those forever, okay? But stocks are very risky. Stocks are going to go up, they're going to go down, or the stocks, they can go to zero, they can go to a million, not a million, but the moon, you know? Like Tesla went from like $30 all the way up to 1,000. Or you can get unlucky and buy a stock that's $50, and it goes down to zero. And now it's 5 cents a share, or it's 1 cent a share, or it's 0.001 cent a share, and then it gets kicked off the NASDAQ, put into the OTC market, and you are screwed. Okay? So that's the difference between index funds and stocks, right? Now you can buy legitimate companies that are profitable. They have a long-standing record in the stock market and in a business. They make $1 billion a year. Let's say Apple, you know, they always become profitable. They're always making money. They're always moving up. But also you could end up buying into unprofitable companies like Peloton if you don't do your research. They do good and then they just start tanking because they can't sell any more stuff because the pandemic's over and nobody wants their stuff anymore. And they're unprofitable and they're not making any money. Okay? So that's something you want to stay away from. But anyways, let's talk about, let's see. If you like this video, like and subscribe. Whenever Facebook tanked, they lost $200 billion in their market cap. Like, how did that even happen? That's crazy, you know? Like, that could happen to any of these huge companies, especially Apple. If Apple lost like $800 billion, you're going to lose a bunch of money. So I feel like Apple, the speed it's going up at is kind of risky. They are a solid company. I'm pretty sure that the market is a bubble right now and it could pop at any moment. So I would be very cautious. That's why buying index funds are always the best. This company is the only company that did good during the day, and everything else tanked except for CVX on my portfolio list. So this is a company I really wanted to invest more money into. I got in at 126. I was going to buy more. I wanted to sell my Snapchat out and buy Chevron and some other oil companies because they're saying oil might go to $300 a barrel. Look at that. It's climbing. It's up at like its all-time high. And so like if oil goes to $300 a barrel, I mean, like, these stocks are going to shoot up. Like, these are the stocks that you get into when all the other stocks are tanking, right? So all the technology stocks are tanking, so you get into value and commodities. Chevron is a good oil company, and oil's going up. And then the wars are happening, like Russia and the United States, the Ukraine. Biden saying that they're going to send 3,000 troops to Russia or Ukraine or the borders and try to defend them or whatever the hell is going on. Like, spooked the market a little bit, and then all these stocks sold out, and then everybody bought into oil stocks. I feel like that's just how it works, you know. And that's why the S&P 500 or index funds are good to buy into, because if you buy one stock, that stock could just tank whenever something happens. But the index funds, you know, the some stocks hold the other stocks. You know, half the stocks might tank, but the other stocks might go up, and then it evens it out, and then your losses aren't so extreme. You know, and then you make gains over time, because normally the market goes up a percentage every year, and then you will follow that. Let's see what's going on. Let's see what's some good things to get into right now. Now, I know one good thing to get into is VT. VT is a very good index fund. I would say it's one of the best because it's like 60% United States and 40% the entire world. So it's pretty much like buying the S&P 500, like United States index funds, and then international index funds into one. And then all you gotta do is buy VT, and you pretty much have exposure to everything. So this Yahoo Finance article says, at this stage, it will be prudent to invest in a U.S. corporate behemoth with favorable ZAC rank and strong potential for 2022. 5 of them are Chevron Corp, ExxonMobil, Advanced Micro Devices, Costco Wholesale Corp, and Deere & Co. So they're pretty much saying, just like companies that are commodities, right? Invest in commodities. I would say like Walmart might be a good one to invest in. Their sales might go down, but everybody's still going to be shopping at Walmart, or any like company that like sells food, or like groceries, because people might stop buying fast food, or people might start buying more fast food because it's cheap and cost efficient, because like you can go to McDonald's and buy 2 McChickens and then you can eat that for the night for $3. You don't gotta make some huge meal at home, or you can just go to the store and buy a little bag of rice, make that for $1. But or some ramen noodles. So Chevron Corp, oil companies, they are definitely a good investment because everybody needs gas, everybody needs oil. The world won't run without oil, at least for now. And Advanced Micro Devices. Oh, AMD. Yeah, I like the look of this. I'm thinking I might sell on my Snapchat and put it all on AMD. I don't know, their price to earnings is pretty high. Why is AMD a buy? AMD is riding on robust performance from the computing and graphics enterprise embedded with semi-custom segments. AMD is benefiting from the strong sales in its Ryzen and EPYC server processors owing to the increasing proliferation of AI and machine learning in industries like cloud gaming and supercomputing. The growing cloud of 7 nanometer products in the data center vertical, driven by work from home and online learning trends, is a key catalyst of advance of AMD. AMD has raised its 2021 guidance for revenues on the back of strong growth across all businesses. Zacks ranked number 1 advanced. AMD has expected earnings growth rate of 43% for the current year. The Zacks consensus estimates for current year earnings improved 20% over the last 7 days. Okay, so honestly, I think AMD is a good buy too, and it's like, I wish I would have got in at 75. And you know what, it might still be a little bit too high. I don't know what the fair value of AMD is. When I Google it, it says from February 2nd, the fair value is about $114 a share. You go on here, right now it's trading at $112, so it's $2 cheaper than what it should be. I mean, Googling it is not the best way to do it, but if you want to get a quick search for the fair value, you can Google it, because other people will do it for you. But I always recommend that you do more analysis and looking into something before you freaking just start investing in it. I know that AMD is a good company though, and let's see if they're earning money. Okay, so they had a net income of $974 million. It looks like they did not beat their estimates here because this is red. Their operating income is $1.17 billion, and then their revenue is $4.83 billion. So they have a nice revenue. They have a nice income because they're literally almost $1 billion in a quarter. Come on, man. Yeah, so they've been doing pretty good over the last 4 quarters. Just because they did a little miss doesn't mean anything. For Facebook, it meant a lot. But nobody likes Facebook anymore because they're a bunch of communists and they're trying to take over the world with the metaverse. But yeah. And ExxonMobil, just like Chevron, I'm sure they're almost the same. I'm sure they have different practices or whatever. One of them could be better than the other, but I don't know which one. Okay, so Chevron earning. Oh wow. Okay, so they had a net income of $5 billion and then a $45 billion revenue. Oh my god, that is insanely nice. That's a lot of money. So I'm thinking Chevron's a good company to mess in. For me, like, I'm not talking for you, I'm talking for me. Honestly, look at that. AMD's only 112. Snapchat, it's down to 39. So I'm down $126 on Snapchat. If I sold my Snapchat and bought 5 shares of AMD, 5, I might be able to make my money back. Because it's actually a really good company and Snapchat's not making any money. I was really hoping Snapchat would get to 48.20. I might sell a limit order for 48.20. I'm just going to sell them at what I got. Now I'll just do 14 shares. Good for till canceled. Yeah, sure. Okay. Anyways, that's my plan. I'm going to get out of Snapchat. I'm going to get out of a whole bunch of stocks. I want to get out of everything and then go into good, very, very good companies. I mean, Snapchat's a good company, I think, but they're just not profitable yet, and I don't really want to be in an unprofitable company. I want to be in something like a commodity. Like, shit, maybe I'll just buy gold or something like Peter Schiff. I might just buy some index funds, maybe VT, VTI, or something like that. Maybe VU. But anyways, have a good night. Like, subscribe if you enjoyed the video. If you got any information, those are some good companies that I looked into. Honestly, I've been wanting to buy more of those companies. That's just my opinion though. Give me your thoughts and I will read the comments below, and then if you have any ideas, I will make a video about it if you just recommend them in the comment section below. And I think you can get some free stocks if you sign up through my links in the description. Thank you for watching my video.